Well, this time last year, the chief executive of Charles Taylor spoke to us about a fantastic 2015. Well, 1 year on, David Marock returns and joins us now. So, David, do we describe 2016 in similar glowing terms?
So 2016 has been a really solid year, as you said, building on the fantastic results of the prior year. We had our top line grow almost 20%. We've had earnings up somewhere in the region of 13%. That's built on the last 5 years, where in fact revenue is up 60% and earnings are up 90%.
Okay, so those are big numbers. They're not insignificant at all. So what has been the main driving force behind the growth of the top line numbers?
Sure. Well, our strategy was always around growing the core businesses, which were very good, solid, high-performing businesses, and growing those out. And we've had some real success in doing that over both the last year and the years ahead, the years prior. But in addition, over the last year, we've started to develop a number of core strategic initiatives that we believe will create the future growth as well.
Okay, because when I'm thinking about those high growth businesses, there's always the problem that they'll hit maturity. You know, what initiatives do you take to make sure that they keep growing at the same pace?
Well, part of our culture has been to create an environment where people are always looking for new opportunities to grow the business, new clients, new services, and such like. And that's been key to our success to date, and we believe will continue to be. But in addition, that's where our new strategic initiatives that we've been building over the 2015-16 and continuing to invest in into 17 are part of creating that long-term growth.
Okay, because you've been around a long time. We're talking about the late sort of 19th century. So I suppose you have to adapt, amend and build. And an analyst recently, in fact, described one of your businesses as disrupting the global insurance market. Is that a fair assessment? Have you become a digital disruptor?
Well, one of our big strategic initiatives is called Charles Taylor InsurTech. And that is essentially taking our 200 plus staff who are dedicated to insurance technology and turning that into a fast growing business. Alongside of that, we made an investment in a software company called Fidata. And together with that software company, we believe we have the ability to do exactly that, disrupt the market, or more exactly, actually enable the market to move to its future model.
So is acquisition an enabling part of your strategy going forward? I know that you made the acquisition of, is it Seeger?
That's right.
Last year.
So acquisition is definitely part of the strategy. I'm a big believer that any really strong business needs to grow organically. And in fact, if you look at our growth over the last 5 years, the vast proportion of that has actually been through organic growth. At the same time, when we can find the right acquisition, or it could be a joint venture or an investment of sort, which can complement what we're doing as part of our core organic strategy, we're absolutely keen to be able to explore those and where appropriate execute on them.
Okay, so if we use a maritime metaphor, you're still casting your nets wide and far, looking for more partnerships perhaps?
Absolutely right. At the same time, what we're finding, and I'll struggle to carry that analogy fully forward, is what we're finding is that the fish are coming to us, if you like. We're finding more and more companies who are looking and saying we want to be part of a fast-growing business that's successful, that has a culture that we can feel comfortable with. We're finding companies, individuals, teams saying, actually, we'd like to be part of you. And that actually means we end up in exclusive discussions with those parties, which means we actually see the best of the bunch, if you like.
Okay, well that's tremendous news. So obviously the minnows and those approaching you weren't put off by the fact that you updated the market with revised market expectations last year. What was behind the reason for that, or was it just managing investor expectations?
Absolutely. What happened is we did the acquisition midway through last year of Seeger. And as part of that process, the analysts effectively updated our forecast for the future years to reflect the profit value generation that business could do. Unfortunately, what it didn't reflect was our ongoing investment in a number of our core initiatives across the group. And therefore, while that acquisition is and we expect to be earnings accretive, it was offset by the ongoing investment in new initiatives, which meant our earnings we were actually expecting were going to be growing at a slightly slower rate than the market had, and hence we needed to highlight that to the market.
So finally, we'll pick up on that very key word, ongoing, and ongoing initiatives. What can we expect from the company over the coming 12 months?
Well, 2017 is a really exciting year. We've been making the investments I was talking about across both our core business and in terms of our strategic initiatives. We'll be continuing to do that into 17. We would expect during 17 to actually see the fruits of that effort in terms of starting to see client take on, starting to see new wins, and that over a longer period should deliver benefits to shareholders.
I look forward to speaking to you again in 2018. Thank you. I'm sure there's a
pleasure.
Delightful 12 months coming ahead. David Marock, Chief Executive of Charles Taylor, thank you very much indeed for joining us.
Thank you very much.